Hi everyone, here we are with Chapter 8. And I'm going to be perfectly honest with you, we're not really going to spend a lot of time on Chapter 8. It's something that it's very, very finance focused. It's information that you will get in your other classes, specifically accounting and also in business finance. So I just want to, the point of all of this is just to make sure you understand, as I said before, the importance of good financial records, and from those good financial records, you can get accounting and accounting records. You get information that helps you make decisions, and in the process of that, there are quite a few different ratios, ways you can, the numbers in and of themselves don't really have any meaning. I mean, they do have meaning, but until you compare them to other situations or other, if you compare revenues to expenses, that kind of thing, then the numbers start to come alive. And also, instead of looking at things in terms of raw numbers, you can also look at them in terms of uh, percentages, and that kind of helps you out. So we're going to talk a lot about that today. Okay, so one thing that you want to do is you might want to try and figure out. We talk about hypothesis, trying to prove something right or wrong, and trying to figure out what are the best products or services to offer. So that's one option. So we want to talk about hypothesis-driven analysis. Another thing, do it in small batches, coming up with some sort of experiment to see what customers respond to, different sale time, different opening time, things keep cents off, that kind of thing. So it could be done in retail and also done in a manufacturing setting. And then it's important that you have some kind of you have an important foundation and a strong foundation in what it is in terms of what you're looking for. What are the key things that you want to measure? So, in terms of measuring performance, you want to be only looking at things that are critical to the profit, and what is it that what's your core business, and you want to start from the large idea and move down to more specific. So, some of the classic analysis techniques are ratio analysis, deviation analysis, sensitivity analysis, which we've talked about before. We talked about the deviations before. We talked about sensitivity before, and then short surveys. So let's talk a little bit about ratio analysis. There are a variety of different ratios that you can look at: liquidity, activity, leverage, and profitability. Liquidity ratios measure short-term ability to meet its obligations, and financial liquidity is super important for your success as a business. There's no doubt about that. So here we go. Current assets over current liabilities, essentially. So you go through just a chart of how to do that. So that's not too important. Okay, then we talk about activity ratios. Activity ratios measure the efficiency with which an entrepreneur is handling the resources of the business. So inventory turnover, how long do things linger on the shelf? How long do people have to, or are they leaving as soon as they come out? Are you ordering quickly enough? Accounts receivable turnover. So how quickly are people paying their bills? And then total or fixed asset turnover. So again, inventory turnover, these are just commonly used ratios, and then this is how you calculate them. So then leverage ratios, essentially ratios that are used to examine the relative level of indebtedness of the entrepreneurial business. So how much money do you owe? So debt to equity, debt to assets, and then times interest earned. So high debt is very bad. You do not want high debt. You want to be careful that you stay away from that. So here we go, debt to equity, debt to assets. There we go, how you would figure them out. And then here are some actual real life examples. And then profitability ratios, ratios that examine the performance of a firm and its ability to make economic rents over and above its costs. So you look at the things that we're really interested in are gross profit, operating profit, net profit, ROA, or return on assets, and ROE, return on equity. So how much ownership you have in there. And again, those are the formulas, and then here's practical application. So Ratios really are super valuable. It gives you a lot of information. It's a way to, as I said, to move things away from the raw numbers and look at them in terms of percentage, because I think that gives you a little bit better feel of what's going on, a more objective feel of what's going on, and look at what's happening in your business. And it's good to look at it over time. If you look at numbers over time, the numbers can change. The numbers might be very different, or maybe they're increasing, but because of the economy or whatever, then maybe the ratios are going down. So ratio analysis is very important, and again, something that you will talk about in your business finance, if you have not already, in your business finance, and also in your accounting classes. Okay, so the deviation analysis, again, looks at performance based from one period to the next. So how do we do in the first quarter versus the second quarter, or the first quarter of 2016 versus the first quarter of 2017. So here we go. It's all looking at all the different ratios. Then sensitivity analysis. This idea that looks at chart, cash flow statements, income statement, balance sheet to create a pro forma projection. So we talked about pro forma. One of the last chapters, pro forma is what's going to happen in the future. And if there's some sort of increase in sales, decrease in sales, some sort of great complication in terms of a change of a law or natural resources or that kind of thing. So here we go. Again, projected cash flow. All right, and then the idea of using surveys. So surveys gather some kind of contextual information. It looks at what is the situation that's going on, and you might want to look at that as can you interpret the context of what's happening? And surveys can be given to customers, they can be given to vendors, they can be given to competitors, that kind of thing. It's a good way to get like a 360-degree view about what's going on. It is important though, because in surveys, of course, there's always bias involved, just like there is in marketing. And you want to make sure that things look like focused right at the mission of the strategy. And again, we talk about that over and over again. It's so important to always be focusing on the mission and the strategy and staying on target with that. So survey data can be tabulated in a variety of different ways. And simple statistics, you can use percentages, or that you can have a lot more sophisticated analysis. That's something, again, you probably would contract with an outside expert on. So here we go. Just look at something in terms of you're looking at a restaurant asking questions. Okay, and then it's important though you have some sort of standard measurement, because if you don't have a standard measurement, then you're kind of just all over the place in terms of you have nothing to compare it to. You're comparing you're using you're trying to compare Spanish and French. You have to have things that are let me put this way, you're trying to interpret things using two different languages, and you can't do that. So maybe you're trying to, or looking at things and interpret things through the eyes of baseball versus basketball. You can't do that. You have to have one focus and one measurement, one standard measurement. Okay, so we talked about this, as I said, we went through this very quickly, very, very quickly, but as I said, these are areas that you would work with a professional on, and you should it's important that you be aware of them. You don't necessarily need to know how to implement them, you just have to be aware of them. So we need a solid financial foundation and measure performance. One method to do that is some methods to do that are ratio analysis, deviation analysis, sensitivity analysis, and short surveys. And you have to have some sort of consistent measurement. Okay, thanks. We'll see you back for Chapter 9.